what do you make of the argument? You heard this guy from the Mercatus Institute, Kervin Erdman, that is saying that actually, to some extent, Fannie and Freddie are too conservative. They are lending too little. And as a result, they're creating a housing crisis and the house
Well,
affordability
see,
and all
that's
this
what see
stuff.
that's precisely what I mean. Is that with them in government conservatorship, they can fall victim to exactly that line of argument that it's Fannie and Freddie's fault. All they need to do is lower their credit standards, and there's no independent check on the need for those loans to be profitable and to be creditworthy, because the government can tell them what to do. And I don't like that. I don't know if it's true or not that Fannie and Freddie's standards are too strict. I would suspect not. I would suspect that this is exactly the push because the private label market never came back after the financial crisis because investors just won't trust Wall Street firms and won't trust subprime lenders, and so that market has still been done 17 years later. And so now people who want the subprime market to come back are trying to push Fannie and Freddie to take those credits. Do you want them to as a taxpayer? Where is that line between what you might want them to do as a home buyer and what you might want them to do as a taxpayer who's responsible for their losses? Well, a publicly traded company with responsibility to shareholders can at least has a chance of getting that balance right.
Yeah, I think I can see your stuff, but I think that
Thank
there are
you.
also very strong incentives to manipulate the subsidies in various ways to maximize the return for the shareholders. Because the easiest way to make money in a business like this is to manipulate the agreement with the government.
Yeah.
And why do you have to innovate or do something fancy when you have a way to extract? They specialize in extracting. And uh, if there is some profitability now, I would prefer this profitability to be spent in expanding access to credit to new families rather than to give money to Bill Ackman. To be honest.
We should at least then have an honest conversation as a country. Do you want them to extend credit to people who may not be credit worthy, and for taxpayers to bear the losses on those loans if indeed they don't work out, rather than just having it sort of forced on the American public through the two companies being under government conservatorship? I just think that's a conversation worth having, and who should bear the losses for that is a conversation worth having. But I don't think I don't like the idea of it just happening under in the still of the night, right under the cover of darkness, where Fannie and Freddie suddenly expand their loan box to allow for weaker credits, leading then to huge losses that are taxpayers' responsibility without anybody being told that that's what was going to happen.
But in the last 17 years, they've been super profitable, suggesting they've done too little.
Well, not necessarily. They've been super profitable, but we also haven't had an economic downturn. And so whether they would be super profitable if we head into a recession is a different question. None of their loans have really been stress tested. And so the idea that you want them to start weakening their credit quality after this huge bull market when we might be on the border of a recession, I think is asking for a problem. And again, maybe it won't. Maybe the US economy will just continue to be on this incredible tear for decades, but we should at least have a conversation about the trade-offs involved in that. And I've always thought that then you should separate this question also of first-time homebuyers from access to mortgage credit. They're really two different things. I mean, one is a subset of the other. You may want to encourage first-time homebuyers to be able to have a house, but that's really different than broadly encouraging access to mortgage credit that allows people to do cash-out refinancings and allows people to purchase investor properties, because it's those latter two things that really led to the financial crisis, not first-time homebuyers. And so somehow in any design that encourages home ownership, you want it to actually be encouraging home ownership. You don't want it to be encouraging speculation, and allowing access to credit.
No, I completely agree. But there is a system, and the system is you have to declare what you're doing. And if you lie, that's a different story. But and
Right.
there wasn't enough attention to people lying. But it's not that they're not two different standards. When you when you buy a property for investment, you get a completely different rate. And not only because of the subsidy, but also because the lenders know that they are much more likely to leave a house, abandon a house if you're not living in that. If the house is underwater, but you live there with your family, you tend to stick around unless it's massively
No,
underwater.
no, well, that was true until the financial crisis. But I guess my point is that if you were to go into the territory of encouraging Fannie and Freddie to weaken their lending standards, you would want that to be very specifically for first-time home buyers. You would not want that to be weakening their lending standards for any other kind of mortgage, whether a refinancing, a cash-out refinancing, or purchase of investor homes. So I just think that we have to be really careful to distinguish, to make sure that you're encouraging the kind of behavior that you want to encourage. And there always has been, back in the run-up to the financial crisis, there was this huge blurring of the line. Congress really played this double game because they knew full well, due to testimony from executives from subprime companies, that subprime mortgage companies, that most of their business was cash out refinancings. But there was always this, let's pretend it's home ownership, because everybody wanted to keep the economy going via cash out refinancings. And so nobody wanted to look too closely at what was really taking place. And that's the problem, is that there are people who want to play that game by blurring that line, because it allows for the illusion of a healthy economy until the home equity is gone. And so I just don't think I'm really opposed to continuing that in any way. And it's already starting today. I mean, the pressure on people to do cash out refis, it's everywhere. It's almost back to the day. I remember driving through the city of Chicago after the financial crisis and seeing the banner flapping on the abandoned building saying, "Let your home take you on vacation." We're heading back into that same territory now.
No,
Anyway.
I think you're absolutely right. But going back to one of your favorite topics, which is private equity, as you know, there is a lot of private equity entering into the residential housing, precisely in the range of smaller houses for first-time buyers. Uh, that to me suggests there is some friction, because how is private equity making money? It means that they can rent at a rate which is much better than the financing rate.
Yeah.
And so somebody is not getting credit that otherwise they could get.